Artificial intelligence is not on the way, it's already here. PricewaterhouseCoopers has estimated that AI will contribute up to $15.7 trillion to the global economy by 2030 alone. So there is no better time to lock in and think about how do we get our piece of that action. Investors who are taking the time right now to actually understand AI and also where it fits in the economy are going to have a really good chance to participate in this generational change that is occurring. In this video, I'm going to be breaking down a beginner's guide to investing in AI and the 3 strategies that I'm using to think about how to invest in this emerging sector. I am not a financial advisor and this is not financial advice, but if you're looking for some of that good stuff, definitely feel free to reach out to one in your local area. This video in particular is for educational and entertainment purposes only. Before we dive too deep into the strategies that I'm using, let's talk about how exactly anyone can invest in AI. The first is going to be to buy individual stocks. Now, in reality, to be honest, this is probably the worst way to go about this because trying to pick winners and losers is technically a loser's game. Even professional money managers like hedge funds rarely ever outpace the S&P 500 or the NASDAQ over the long run. Now, if you just have your favorite company that you want to put some money in, hey, you go for it. At the end of the day, it's your money. Instead of investing in individual stocks, you can also invest in ETFs. And let's talk about why this can be one of the most powerful ways to go about it. ETF stands for Exchange Traded Fund. And what it pretty much is just a basket of different securities like stocks in one ticker that you can buy. There's 2 major types of ETFs that you'll see. The first being sector ETFs. And these are going to be things like technology or energy or financials. And for instance, a technology ETF might have a broad range of companies in tech, such as Apple, Nvidia, as well as things like Netflix. The second type of ETF that you'll hear about often is called a thematic ETF. And so instead of focusing on a particular sector or industry, these are about particular themes. So it could be something like AI or cloud computing, or even things like crypto ETFs that just track different types of companies that play within that overall theme. So instead of it being only financials, if you were in the financial sector, right, you could have something that's about financial technology, which also lumps in software companies and things from other industries that aren't particularly just about finance. Now, the thing about ETFs is that they are not free. There is usually a fee associated with investing in these ETFs, and that is called the expense ratio. So whenever you're going through and looking at different kinds of ETFs that you want to invest in, you definitely want to compare the different options that you have by their expense ratios and definitely take that into effect when you're looking at how you want to project your returns out into the future. The expense ratio is basically just a management fee, and it's typically less than 1%. But it's definitely something to keep in mind if you're going to be investing, because you still want to compare that expense ratio against the different options that you have. The big advantage of using ETFs is that you kind of have this built-in diversification, ideally. Now, in reality, it's not always the case, or at least that tends to get skewed over time. For instance, the S&P 500 has gotten to where 7% of that entire index is actually Nvidia. And that happens when things get out of balance and companies grow faster than other companies. So you always have to look at that as well when you're investing in ETFs is, are you really getting the diversification that you're looking for? The reason that you want to even consider diversification is because technically a company can go bankrupt or something could happen with their supply chain that completely change the trajectory of their profit outlook in the future. And so by using ETFs or by diversifying your portfolio in however you do that, it will allow you to have greater exposure to other different assets. And that way, if one company goes bankrupt, that doesn't completely blow up your portfolio. And when it comes to investing in equities, this is really important because technically any money in the equities market can go to zero. So you want to protect yourself by diversifying across more companies, sometimes different sectors, and so on and so forth. So you can invest in individual stocks if you'd like, or you can take the safer route and invest in these ETFs which likely give you a more broad exposure to the idea that you're trying to express in the market. For anyone who qualifies as an accredited investor or who just happens to have a nice amount of cash that you're looking at investing, you could also consider private market opportunities. There are a lot of startups that are going to be coming up in this space, and right now it is certainly a time to get asymmetric return opportunities in looking at these smaller companies. Now, you could also invest into a venture capital fund that particularly focuses in on AI. Those funds are going to come with fees, so definitely be sure that you're understanding that as well. And as a private market investor, once again, if that's not something that you do professionally, then sometimes it's better to delegate that to these venture capital firms who do spend their entire careers simply investing in technology and mastering the game of finding the big winners. So now that we know how to invest in the sector, let's also take a look at the different strategies for how to actually get in. If AI is a skyscraper, then infrastructure is the foundation. Let's talk a bit about the AI value chain, from digging materials out of the ground to you clicking a button and utilizing ChatGPT. First, we have the physical inputs of this whole equation, right? We have materials that we need to get out of the ground in order to, one, create chips, and then also to actually build the factories that are going to create the chips and to build the data centers that we're going to be using in order to actually get all of this AI in motion. Now that we have the data center, we're going to need a large amount of energy in order to power this data center to its maximum capacity. And after that, we're going to need to use these AI models or build those AI models on top of this infrastructure that we now have in place. And this gets to where we're getting into the software of everything that we're talking about, where you have these AI models like Perplexity and ChatGPT. Now that we have the model in place, we can actually build applications on top of those models. And so you can think of these applications as things like Leonardo.ai, which is an image generator, or sites like Lovable, where you can actually chat to it and it will give you a website as an output. Usually these types of applications are built on top of some other large language model. Next, we have something that a lot of people are overlooking right now, and that's cybersecurity. We need to protect all of this data that's flowing around, and that comes from even the data centers themselves and the training data that these AI models are using, but also the user inputs and the interfaces and all of the servers that are delivering these AI models to the end user. Another aspect of this that not many people are talking about is cryptocurrency and how it could actually end up being the native currency for all of these different AIs to interact with one another without us having to be the intermediary in that equation. The first thing that I'm looking at is the energy side of this equation, because without energy, none of this really works anyways. Running AI models takes a vast amount of energy. And it's a lot of energy projected out into the future that we don't really have today. So people are looking at how are we going to keep up with this demand for energy in the future? And one of the answers has been to look at the development of nuclear. China is already way ahead in their development of nuclear power, and the United States might be in the position where we're looking to play catch up. For some perspective of how important energy is going to be, already, it's estimated that up to 20% of all global data center power usage is coming from AI. And then on top of that, into the future, just a few years away in 2030, it's estimated that AI will be responsible for up to 21% of global energy demand. Without energy, none of this stuff is really going to work out. So what I'm doing personally is preparing for where the shift in how energy is actually going to be created to keep up with this demand by looking at uranium and nuclear ETFs like NLR by Van Eck or Global X or any of these other ETF providers. If you like the idea of infrastructure but see a better opportunity in chips or maybe in data centers, there are also ETFs that track those themes as well. For instance, you have the SMH Semiconductor ETF by Van Eck, and then you have the DTCR ETF that's for data centers, that's by Global X. The second thing that I'm going to be hyper focused on throughout this shift is going to be something that will make all of this crumble yet again if we don't get it right, and that's going to be cybersecurity. The thing is already has cybersecurity become increasingly more important as we move into this digital world, and we've seen companies like Palo Alto Networks continue to thrive in this environment. The thing is that as AI gets smarter, so do the threats that we have coming at us from AI, as it can be used as a weapon against us. So cybersecurity to me is going to be extremely important moving forward. And that is why I also am going to be looking at ETFs that track this particular theme, such as CIBR and or HACK. And then there's crypto. And do not act surprised. You guys know my philosophy on how crypto plays a role in AI. Now, when it comes to this, there is one particular project that I think is super important, and that is going to be HBAR or Hedera Hashgraph. And I highly recommend understanding this project, whether you decide to put your money in it or not. None of this is investment recommendations, and we can do a deeper breakdown on why HBAR is super important in this AI economy moving forward. If you guys want that, let me know in the comments. Let's zoom out and break down what we just went over. If you just want broad exposure to what's happening with AI, then you could invest in thematic ETFs like AIQ by Global X, or you could even just invest in the NASDAQ like the QQQ. The thing about what's happening right now is a lot of the players that are going to win when it comes to AI are the companies that already exist. So companies like Microsoft, Google, and Meta are already well positioned to take most of the market share gains that are going to come from AI. If you feel like you can generate alpha by looking at the infrastructure of all of this, then you could consider some of those nuclear and uranium ETFs that we talked about, or even potentially data centers or chips. It really depends on where your expertise is and where you'd want to focus. And once again, if you do see particular stocks that you really believe in and understand, then you can always do that as well. There are a lot of incredible projects in the crypto space that may give you a real edge when it comes to creating asymmetric returns over the next 10 to 15 years. Let me know in the comments what you're looking at in the AI sector and what you think is going to be the best opportunity to get ahead. If you found any of this useful, hit the like button and subscribe. I'm Keith D, here to talk about everything money and markets, and I will see you next time.